live. Go live and almost ready, almost ready. There we go, and there we go. There we go, and there we go. All righty. Ready, 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 ready. Oh, my glasses. Uh-oh, I'll be right back. Gotta go get my glasses. Can't see without them. Good evening, good evening, good evening, everyone, and how are we doing today? My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, taking you along for the ride for a simple, safe, predictable, consistent, and 1% per week. That being said, let's get the ball rolling. What we're going to do here is you guys are going to give me a stock to take a look at. I'm going to take a look at it and put it through, let's say put it through the ringer that I like. What am I looking for? Simple, safe, predictable, consistent, 1% per week. Now, I came up with a strategy when my 9-year-old daughter asked me a while ago, back in 2008, as a matter of fact. She said, Daddy, what are you doing? Can you teach me? All right, fine. How do you teach a 9-year-old to invest in stocks? It had to be simple, safe, predictable, consistent, and no way for her to lose. Well, here's the thing. With 5 criteria, all those things I just said, I had to come up with some rules. Rules are simple for a 9-year-old to understand. After all, she was only 9. So here we go. Rule number 1, never buy something you do not want to hold on to long term. Because you just might have to, or you just might get to. Depends on how you look at it. Rule number 2, never sell at a loss. It kind of defeats the purpose of the whole game. And yep, it is a game. We play a game for money. It's just like Monopoly. 4 green houses, 1 red hotel, just the way it is. That being said, rule 3, make sure the company is consistently profitable. Now, you would think that's an easy one, but as the night progresses, you'll see, just like I see every single night, you'll be surprised at some of the stuff people put their money into. It's weird. Why, in all good conscience, would you put your money, your hard-earned money, into a company that's not profitable? That makes no sense to me whatsoever. Okay, who do we have here? Are you in school, or is it Hertz, a green screen? No, it's not a green screen. It's a real screen. And no, I'm not in the school. I'm in my spare bedroom broadcasting to show everybody what to do. What is that? Noodle Team. Interesting name. Pasha Farah. Good evening. All right, that being said, let's go finish up the rules. Rule 3, make sure the company's consistently profitable. Rule 4, weekly options only. The name of the show is Dividend Stock Talk. Subtitle, Dividend Investing for Weekly Cash Flow. It kind of makes sense that we're only looking at dividend stocks. Weekly cash flow. That should be another clue right there. That has to be something on a weekly basis. I have no intention whatsoever to sit in front of a screen looking at this stupid thing all day long. No thanks. I tried that when I was younger and it didn't work for me. Heck, you kid. You want to learn. I am 13 and I already invested in myself. Okay, see, I can't talk to a 13-year-old. It's improper. You should be talking with your parents about this kind of stuff. All right? So, number 1, you should have told me how old you were. Number 2, you really shouldn't be here. Think about it. Anyway, what do we have here? Manny, 88. Wow, a lot of people want to do co-host with me. I don't know any of these people. Okay, co-host, don't get me wrong. I love the idea, but I would prefer to co-host with someone I actually know and has some kind of topic knowledge. So I didn't get to rule number 5. Hey, K-Van, what's happening? Let's go. Yep. Don't think we'll keep it at 12. Oh, well, let's take a look, Ben. We're going to take a look at Ben. Do you gamble at all? Absolutely not. I went to Vegas twice in my lifetime. Okay, the first time was in 1986. I walked in with 20 bucks. I left with 20 bucks. Okay, last time I was in Vegas, okay, I spent a little bit more than I should have. I didn't gamble. I'm not a gambler. It's just the way it is. Well, my God bless you and have a good rest of your day. Thank you there, kid. All right. DLR, we'll check out that one. And HRL is weekly. No, Hormel is not. It's a monthly. Hold on, I gotta fact check this here for a second. HRL, which is Hormel. Okay, HRL. It would help if it actually worked. Okay, HRL, Hormel. Okay, now I hate to be the bearer of bad news. I forget who said that. Oh, Rex. All right, Mr. Rex is right. October 24, October 31, November 7, November 14, November 21, November 28. Those are all weeks of the year. So you're right, Rex. Thank you for that. I thought it was a monthly. Well, I thought it was a weekly, then it went to a monthly, and now it's a weekly again. Okay, is what it is. So Ben doesn't think Ford's going to keep at 12. Oh, wait a second. I didn't get to do rule number 5. Okay, rule number 5 is make sure all the numbers work. My voices sound terrible already, and I took 3 days off. Uh-oh, this is not good. All right, so Ben wants to take a look at Ford first thing this evening. All right, Ford, I love Ford, really do. Actually, I bought some Ford this morning. The numbers were just crazy. I said, okay, why not? Here we go, you ready? First thing I look for, every time I look at a stock, always the same. I'm looking for 5 things, and it takes me 3 to 4 seconds to find them. Are you ready? Here we go. 5. Number 1, the high of the year. Number 2, the low of the year. Number 3, where was it a year ago? Number 4, where is it right now? And number 5, let's go choo-choo train. Choo-choo, down, up, down, up, down, up, down, up, down. Now she's going up. This is the area we want to look at right here. Okay, this is all history. Okay, we know it went down, it shot up. Now it came back down, now she's going. This is the area we want to look at because that's what's happening now. I mean, this is all fine and dandy, but that's what it did before. What does that give us? Well, basically it gives us where the high of the year is, where the low of the year is, and it gives us a pattern. Look at the pattern. Down, up, down, up, down, up. It's not just the up-down pattern. Look at the width of them, okay? It looks like a month and a half, about 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 a month and a half, and here we are now again. Okay, this is the area we want to look at because that's the last few weeks. And the last few weeks gives us a good idea of where it's going next. Where does it look like it's going next? It looks like it's going up. Well, let's zoom in a little closer. But before we do, is this going to be a worthwhile trade? Well, I'm looking for 1% a week. That's it, just 1% a week. That's what I'm looking for. Now, I do a very simple trade. It's called a covered call. Now, if I do a covered call coupled with a dividend stock, and the reason I like dividend stocks is because they're predictable. That means they do the same things over and over and over and over again. They pay out a dividend. They pay out a portion of their profits back to us. We are the investors. So every 90 days, they give us back some money in the form of a dividend, a portion of the profits. Well, if the profits increase every single year, those are the companies I want to join. Those are the companies that I want to buy. I want to buy companies that are consistently profitable. I mean, that just makes sense to me. Now, I'll take a look at anything you want to look at. Don't get me wrong. I will take a look at it and I will dissect it as if I was going to do it myself, and I'll give you my opinion. Don't be unhappy if I say no, because I say no a lot. I'm very picky on where I put my money. The reason being, I'm 61. I'm going to be 62 soon. I don't even collect Social Security yet. Okay, not until January. And then, yay, what am I going to do with that huge amount of money? Okay, anyway, besides the point. Simple, safe, predictable, consistent 1% a week. That's what I'm looking for. So in the 1 year, great. What am I doing? I'm going to buy it first thing in the morning, $11.99. I'm going to turn around and sell it to someone for basically the exact same price I just paid for it, or something close to it. If the price is $11.99, the closest price that I could sell it to on a covered call would be the strike price of 12, because the closest one of these strikes, which is a predetermined sales price. Okay, so it's a predetermined. So we have 11, 11.50, 12, 12.50, 13, 13.50, so on and so forth. Well, if I'm buying it at $11.99, I want to sell it for almost the exact same price I paid for it, which would be 12. And if I sell it at 12, the market maker, he's a very important person in this whole game, okay? He's going to pay me 33 cents per share. So that's $33 for each contract. Now, I know it doesn't sound like a lot of money, $33, but I'm not looking for the money. I'm not looking for the prices on the stock. I'm looking for the momentum. I'm looking for the insurance policy, because that's what it is. It's an insurance policy. Back in the 70s, they decided rich people needed insurance for their stock portfolios. Puts and calls were invented. If you thought a stock was going to go down, you would buy a put. As the stock dropped, the put value would increase and you wouldn't lose any money. Hence the insurance policy. Just like car insurance, just like health insurance, just like homeowners insurance. You pay a premium every single month to protect your asset. Asset here is your stock portfolio. That's why puts and calls were invented. And the premium, that's the insurance policy. I want to collect that right there. And that right there on a $12 stock is close to 3%. Now, I know 3% doesn't sound like a lot, but I'm not looking for a lot. I'm only looking for 1% every single week. So 1% is not that difficult. So this one here is offering me 3%. Okay, well, let's see if it's a good trade. And to find out if it's a good trade, well, there's a little bit of digging we got to do. Number one, you got to make sure it's worthy of your list. Okay, when I say worthy of your list, is it a good company that you would like? Well, let's look at the facts. It's been in business for over 100 years. Okay, Ford Motor Company is known almost worldwide. Okay, it is in an upward trend. Okay, and it is giving me this much money. And if you look a little deeper, what is the revenue per share for Ford? What is the book value for Ford? I know the book value for Ford is higher than the stock price. Well, think about it. Okay, I'll give you, for instance, I check at least once a week because somebody always asks me, NVIDIA. Okay, we all know who they are. The stock is about, last I checked, was like $185 per share. The book value on that's only $4. It's only worth $4 per share. Why are people paying $185? And the dividend for NVIDIA, 1 penny. Why is so many attractive? And revenue per share. What is it, like $16? $16 revenue per share. Now, Ford Motor Company is $12 per share. The revenue is over $100 per share. The book value is over $15 per share. Well, by the numbers, Ford is a much better deal. So why aren't people jumping on Ford? Because they all want that shiny new object. Ford's been around for 100 years. How long has NVIDIA been around? Really? 20, 25, 30 maybe? Though they don't have the name or the reputation that Ford has. May not be the greatest reputation, but it's got name recognition. And it's very challenging to buy a name recognition. All right, so anyway, besides the point. Let's see where we are right here. Great. If I do this one right there, it's close to 3%. Let me, live visibility restricted for 10 minutes. Does not contain any of that crap. Well, imagine that. Well, it's a nice thing that I'm broadcasting over more than just TikTok. Okay, so TikTok just banned me for 10 minutes because I said something that apparently they didn't approve of. Now, explain to me why I'm still broadcasting on a bunch of different channels, but TikTok decided to ban me. Why? What did I just say? I have no idea. Maybe people like NVIDIA, and the people at NVIDIA say, hey, call and cancel that boy. Whatever, is what it is. All right, so I'm going to look for a pattern. There's the pattern. Okay, she went down, she went up, back down, now she's going back up again. Let's zoom in a little closer to see where do we think it's going to go by the end of this week. Because I don't want to be in it forever. I just want to be in it for a couple of days. Make my money, jump on out and say, thank you, see you next time. Now, when I say see you next time, what do I mean by that? Well, they have a dividend every 90 days. And every 90 days, just before they pay the dividend, the stock has a tendency to go up in value. Well, that's when I want to jump in, when the stock is ready to go up in value. Not when it's already at the high. That doesn't do me any good. Okay, and then you got to look at the percentages. From this little run right here, it went from 11.40 and it jumped up to 12.80. Now, that's not a lot of money, but it is $1.40, okay, from here to here. Now, you may think that's not a lot, but guess what? On an $11 stock, that's over a 10% move. Now, think about it. If you had a stock and it jumped up 10%, would you take the profits? I know I would. I'm only looking for 1%. So you better believe I'd take 10 any day. But here's the thing. I don't buy at the bottom, so I would have missed that. Okay, I would have missed this too. I would have jumped in right there because I want 2 days to the upside, and on the third day I'll jump in. Because, see, I'm not very good at picking bottoms, so I don't even try anymore. Because you never know where the bottom is going to be unless you have a lot of support. And support takes a couple of days in order to get it, especially in the stock market. Because look, you hit the bottom here. It took 1 day, 2 days, 3 days before it actually, I would have jumped in. And look how much I would have missed from here to here. But that's okay, because I don't mind jumping in here and taking that run. Because I'm only looking for 1%. That's it. But the thing is, I get 1% almost every single week. Sometimes I make more. Sometimes I make less. Very seldomly do I make more. I think 5 times this year, I got less than 1% for a week, which is kind of okay because other weeks I made 3, 4, 5%. Okay, it all balances out, so it averages over 1%. Okay, so let's take a look. So that's Ford. Let's zoom in. Well, actually, it's right there. Last 30 days would look something like that. Okay, you got your high, your low. Where was it? Where is it? Up, down, up. That's where she is. So you have to ask yourself, does it look like something I want to do? Is it a company I want to have on my list? Well, you got to decide what you want your list to be about. Now, I want companies that have been around for a while, that have proven themselves historically. They'll have consistently increased their profits. Well, Ford's up on that list. It's not the highest on the list, but it's still on that list. And then look, you can't deny this. Here was the bottom. She shot up. She pulled back, almost right at the same bottom again. Now she's going back up again. Look at all that room we got to go before she challenges that high again. Well, that kind of makes sense to me. So let's see what it looks like. Okay, let's get rid of this. Okay, and let's do a practice covered call so you see how it works. Now, remember, I told you I like the 12. So the 12 is right there. Okay, I'm just going to show you one contract, explain it to you, and then you tell me if it makes sense or not. All right, so here's the order right here. Here's what it should sound like. Buy one covered call of Ford. 24 October 25. That's this coming Friday. So whoever does whatever at the other end, remember, there's a bunch of people in this equation. There's me. I'm selling. Okay, I'm selling somebody the rights to buy it from me. Then you have the person who negotiates. That's the market maker. Because I can't sell to anyone. I can sell it only to the market maker. And you can only buy from the market maker. Isn't that weird? He's like the only one I can buy from, the only one I can sell to. And he's the only one you can buy from, and the only one you can sell to. Kind of makes you want to be one of those guys, doesn't it? Okay, hold tight on YouTube. I'm going to get to those questions in a minute. All right, so that being said, okay, the maximum profit on this trade is only 33 bucks. Now, remember when I said simple, safe, predictable? I know exactly what my profit's going to be before I even do the trade. Do you know how wonderful that is for somebody like me who's been trading for years? Buy a stock and then you have to wait for it to go up. Well, not here. Here, you do a covered call. You know what your profit is before you even do it. And what am I looking for? Look closely. I'm gonna explain it really slow and see if it makes sense. All right, so if I'm buying it tomorrow morning, $11.99, and then I'm selling it tomorrow morning for 12 bucks, that's only a 1 penny increase. So can it go up between tomorrow morning and Friday afternoon when the option expires? Can it go up 1 penny? Because if the stock is over $12 on Friday, Saturday somebody will take it from me. I will get to keep that profits and get all my money back so I can do it again on Monday. Or I can do what's called roll it over into next week and ask the market maker, what are you willing to give me just for me to hold on to it for 1 more week? Well, think about it. If I buy it for $11.99 and I get, let's find out what the percentage is before we go any further. Makes it a little easier. All right, calculator right there. All right, so the profit is 33 bucks, okay? The max profit, 33 bucks. So what is the trade costing me? Or should I say, what is my investment? Okay, cost of trade, including commissions and fees, it's 1,100 bucks. Well, right around 1,200 bucks. Okay. So the profit's 33 bucks. My investment is 1167. So what rate of return is that? Now to find your rate of return, you take the profit, you divide it by the investment, 1167. And that comes to a profit of 2.8% for 1 week. Think about it, 2.8% for 1 week. All right, so if 1% is 50% per year, well, 2.8, that's got to be over 138%. That's my guess, 138. Let's multiply it by 52, because it's 52 weeks in a year, 147. All right, I was close. Anyway, but imagine that. If 1% a week is 50% per year, well, imagine that. I got restricted over here, too. Your life is not eligible for restriction, blah, 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 does not comply with the For You feed eligibility standards under our community reason guidelines. Submit feedback. Okay, let's submit some feedback. Okay, TikTok should allow content like mine. I mean, I've been doing it for over 2 years, so why are they complaining now? I mean, think about it. I've been broadcasting the exact same content for over 2 years. Why am I being, what do you call it? Blackball's not the right word. Picked on. Why am I being picked on tonight? All right, let's keep the ball rolling. All right, so that being said, 2.8%. Does that make sense? If 1% a week is 50% a year, 2% a week is 100% a year, well, 2.8, that's going to be up there. Well, think about it. It's not that bad. That's almost doubling. That's more than doubling your money every year, if that's what you're looking for. Okay, so that being said, next. Okay, so who said that one? Ben. Ben, I have a tendency to agree with you. I don't think it's going to stay at 12 either. I think it's going to go a little higher. But take a look. Okay, here's the high 2 weeks ago. Here's the low last week. Now she's bouncing up. How high is it going to go? So let's say hypothetically I do buy it. Well, and I get my, well, I did buy it this morning, but I got my percentage return today. So Friday, what am I going to do? Well, I'm going to look at it, rolling it forward and see what the market maker is going to offer me. Maybe it's going to be more. Maybe it's going to be less. I don't know. But if he offers me enough money, yeah, I'll hold on to it for another week, push it forward another week, collect another 1 or 2 or 3%. Fine, it works for me. And then next week, I'll do the exact same thing. Does it make sense to hold on to it, or does it make sense to let it go? As long as I'm consistently profitable, okay, and I'm not having a risk. Well, I don't think Ford is a risk, but that's me. Okay, yeah, it's going to go up, it's going to go down. That's what stocks always do. Well, let's see what we have next. What do we have next? Will T, how you doing? Oh, family. Oh, finally free Pauline. Oh, finally free Pauline. How are you today? Okay, finally free Pauline wants to take a look at advanced micro devices, AMD. I'm going to say no. Now, Pauline, I asked a little while ago, do not show me something that's at the high of the year. I mean, Are you gloating that you bought it and now it's at the high of the year? Or because you're not giving us the opportunity to jump on board and share with the profits because it's already at the high. That's the time to buy, not the time to sell. So again, why are we looking at it? That's an interesting question. All right. Thank you there, Miss Paulina. Elware Scarface. Okay. AC. A. What is A? Agient Technologies. It's a monthly number one. Okay. I don't do monthlies. November, December, January, February. Those are months of the year. The numbers just never work out, so I don't do monthlies. And number two, it's not the high of the year, but it is definitely the high of this or the 6-month period. Take a look. 6 months ago, we're down here at 100. Now we're at 143. Where's the opportunity? Okay, we're looking for opportunities here. Braxton, how are you doing today? Let's keep on going. VIP Trading, BYND, is the next GameStop. Top 3 shorted stocks, 1 billion shares started traded today. Okay, what is it? BYND. BYND. Oh, hell no. I'm just not going to do it just based on principle. I'm terribly sorry. BYND. I'm not going to do it based on principle. You know what this is? This is that artificial meat. Okay, so if you want meat that's grown in a laboratory or a factory, not from a real chicken, not from a real cow, not from a real pig. No, I can't do that. I'm terribly sorry. I'm way too old school to condone eating fake meat. No, I can't do it. Sorry. Besides, they haven't been around for 20 years yet, so I really doubt they have 20 years of profits behind them. Okay, Ford has earnings this week. Ford had 300,000 recalls this year. Thank you there, Ben. Scene Sound 55, APLD. APLD. I'm going to tell you the same thing I told someone else. What good is it for us to see the high of the year? Okay, seriously, think about it. What good is it for us to see the high of the year? You're just showing us something that we missed. See, it was at $5, now it's at 40. We missed that. So what good is that going to do us? Here's Alex. Alex, calm down. Okay, Alex is there. Alex is. I actually sold a put on Ford this morning at 11. Not quite 1%, but want to own Ford. If you want to own Ford, why don't you just buy it? It's in an upward trend. I wouldn't do a put on an upward trend. Ryan, the film enthusiast, you realize the market doesn't care about book value or revenue. It's forward looking. Thank you there, Mr. Ryan. I appreciate that. I do. I care about book value and I care about revenue. Just think about it. Is the company making enough money to be profitable? What is the book value in case they go belly up? What am I going to get? But thank you for your input. Hot Wheels Mike, Quick 87. Not for you. I'm on TikTok. You are not banned. No, I got a 10-minute ban because apparently I said something that offended somebody. Alex, why wait on Monday to sell call instead of Friday or Thursday of the week before? Alex, I always take a look every single day. Every position I have, I look at every single day. And I look at what is the best scenario for this position this week. So Monday, yeah, I do all my buying and selling on Monday. Okay, but I also look at opportunities to roll forward into next week on Monday. If it's financially feasible, yeah, I'll do it. And I'll do the same thing on Tuesday, same thing on Wednesday, same thing on Thursday, and same thing on Friday. It's always the same questions. What did I buy it for? What did I sell? How much did I get? Where's it at now? Where does it look like it's going? What should I do? They're all simple questions. They're not that difficult. You got to remember, it was created for a 9-year-old, so it had to be simple. All that stuff. Simple, safe, predictable, consistent for a 9-year-old. Now, she's 20. Oh, my God. How old is she now? This is terrible. I don't remember. 26. She's 26 years old now. Holy cow. Which means my son is 36. Does it look like I have a 36-year-old son? Holy cow. All right, so that's my reasoning there, Alex. TikTok is flagging you because you're drinking out of a Sunday mug and it's Monday. Well, alrighty then. That's a good one. Okay, user 5147 wants to take a look at Verizon. Oh, now this one looks better. Now, the reason I say this one looks better is look at this right here. Okay? I mean, it's the one-year chart. Okay? We're looking for the 5 things. The high, the low, where was it, where is it, and what's it doing? Down, up, down, sideways, down, and then up again. This is what's happening right here, right now. $40.80 per share. So the closest strike price, if I'm going to buy it tomorrow, is going to be the 41. And the 41 is going for 26 cents. So you know what I say to that? No, thank you. Don't get me wrong. I love the fact that it's right here. I do. Look at it. Here's your bottom, and she's going up. That's a fact. You can take that to the bank. But here's the thing. If she's shooting up, I'm only making 0.5% for the week. Sorry. I'm looking for 1% or more, not 1% or less. Even though I like Verizon. It's just the numbers don't look good this week. Remember rule number 5, make sure all the numbers work? Well, just because the chart saying is going up, it's not financially feasible because market makers not offering enough money for me to be entertained. I was going to say entertained. Enthralled? Enthusiastic? Happy? I don't know, however you want to look at it. I'm just going to say no to Verizon because the number's not there. Okay, Goat Zeus Aurelius. Goatsus Aurelius. Interesting name. I did it again. Why is it another 10 minutes? Submit feedback. Anyway, got banned again. What is it about talking about money? Because nothing I've said is not factual. Because everything I say is factual. And I'm very meticulous about facts. Because, you know, I just can't remember lies anymore, so I just tell the truth all the time. It's horrible. I know. Okay, so Joey wants to take a look at American Airlines. Now, do I have some American Airlines? I'm not sure. Interesting. Okay, quick little check. Interesting. Here's the high, here's the low, here's where it was, here's where it is. Up, down, up, down. Now she's going back up again. Again, in an upward trend right there. Great. Well, it's 12.17. Well, the closest strike price to 12.17 is going to be the 12 or the 12.50. And either one of them is paying over 2%. And it's American Airlines. I don't know how you feel about American Airlines. That's a personal thing. Do you like it? Do you want to own it? It's a question only you can answer. You have to figure out, does this make sense to you? And is this something you want to do? So let's take a look at American Airlines. Gonna need the glasses for that one. Alrighty. A year ago, we're at 13 bucks. Now we shoot up to the high of the year in the middle of January. That's 1912. Well, the bottom of the year is the second week in April. $8.48. Imagine that. It goes from $19 all the way down to $8. That's more than a 50% drop. Can you buy an investment that drops 50% without losing your cool and selling it? A lot of people can't. That's why rule number 1 is so important. Never buy something you don't want to hold on to. And then you always get that other one that goes along with it. Never sell at a loss. So if she's at 19 and she drops all the way down here, what do? Well, as you can plainly see, it's here, which was back in December. No, wait a minute, that was back in mid-January. And it took almost 3.5 months for it to drop. So in those 3.5 months, that's what, 13 weeks, 14 weeks? What happened during those 14 weeks? And could you have made a profit within that 13-week period? That's why I look at mine every day. Now, most people spend more time with their family weekend barbecues than they do with their personal finances. And then when they get older, they say, well, I wish I had more money. Well, you should have paid attention while you were younger. You guys get an advantage, well, because you're here, because you get the old future ahead of you. You can't do anything about the past, so don't even worry about it. It's like, what can you do now, here, and then tomorrow, and the next day, and the next day? Because when you get to this side of the fence, and this side of the fence is retirement, which means the money that I have accumulated in my working lifetime has to last me for the rest of my days. And I have two choices: learn to do it myself, or give up accountability and hand it over to someone else and let them dictate how much money I can make. Well, you already know the answer to that one. I mean, you're here, okay? You know I'm going to do it myself, because nobody has more interest in my money than me. So I wouldn't trust it to anybody. Anyway, that being said, let's take a look, because the numbers look good, the chart looks good, and let's see everything else. All right, so last 90 days. Last 90 days is the last 3 months. The high, the low, where was it, where is it? Shoots up, pulls back, now she's going up again. You can argue all you want. Okay, here's the bottom, she's shooting up. Here's the top, she's dropping down. Okay, she drops down, finds the bottom, turns around, goes back up. It's what we're looking for. And we just found it right there. The last 30 days, right there. There we go. This is the last 30 days. That gives me a good idea. Where do I think it's going next? 30 days ago was the 30-day high. She dropped down. 3 weeks ago was the 30-day bottom. Now she's shooting up. Okay. Well, do you like American Airlines? Now, I'm going to show you something called the seasonality chart. Now, seasonality chart just gives me a rough idea of where I think the stock might be going based on historical performance. So the blue line, oh, wait a second, hold on. All the way to the left is January 1st. All the way over here is December 31st. So this is a whole year. Now the blue line, that represents this year, what's happening right here, right now. The red line represents 10 years of historical performance. The highs, the lows, the ups, the downs, all that kind of crap over the last 10 years. So as you can see, the high of the year is usually in the month of end of February, early March. And the bottom of the year is usually right about here before she runs back up again. Well, we're right about here. See the blue dot? That's today, right here. So now we're heading up. So let's zoom into this a little bit better. Okay, click here, drag it that way. All right. So if we're right here today, okay, look at that. Nice upward trend over the next 1, 2, 3, 4, 5, 6, 7 weeks, 8 weeks. The next 8 weeks. Nice trend to the upside. If you like American Airlines, it's always going to come back to that. Do I like this company? Am I willing to buy it? Willing to hold it? Willing to do a covered call every single week? Bring that money coming in. I got 2 goals. Consistency of profitability, money coming in, and preservation of my capital. Means trying not to be wrong, because I don't want to lose. If I lose, I'm going to have to go back to work and say, can you imagine me? Good afternoon, welcome to Walmart. How may I help you? Paper or plastic? Does that look like me? No. All right, anyway, let's get out of this. Let's go back to here. Let's go back all the way to there, and let's do one at 12.50. 12.50 for American Airlines. Let's hear it from the gumball factory. Yay, 12.50. There we go. One contract coming up at the market to open. Here's Johnny. Buy one covered call American Airlines. 24 October 25. That's this coming Friday, 4 days away. 12.50 call options against the stock at the market to open. Okay, here's the profit. 56. 11.94 is the investment. What return is that? I got some noise over here. Who's the noisy one? Who's the noisy one? I have no idea who that is. Okay. All righty. Come on. Why isn't that open? Ah, never mind, leave it alone. All right, so that being said, let's do some math and figure what kind of rate of return this one is. So the profit's $56 per contract. It's only $11.94. It's a grand total of 4.6% if you like American Airlines. Now think about it. If you like American Airlines, well, if you don't like it, don't buy it. Okay, don't, it's just, I gotta write that one down. We haven't had a 4%er today. Or I should say this week. All righty, so Goetzus Aurelius wants to take a look at UNH. Goetzus Aurelius. I'm not quite sure. I must have missed that day in Roman history. Wants to take a look at UNH. Now, this is not something I normally do because I stay away from stocks over $300. Sorry, I do. But let's take a look. Okay, the highs here at 650, bottoms here at 240. That's a big drop. Now she's going back up again. If you like UNH. Okay, so I don't know who that is with all that noise. There we go. Muted that one. All right, so that being said, let's take a look. Does it make sense? The bottom's here, and she is going up. What's the last 30 days look like? Wait a minute, before we do that. 364.48. Well, you get the 365s paying 530. Well, that's more than 1.5%, if you like UNH, of course. So let's take a deeper look. Okay, last 90 days. Last 90 days, we went from 240 to almost 375. That's a nice jump. Well, what's it going to do now? All right, the last 30 days. Okay, here's your last 30 days. 30-day high, 30-day low, up, down, up, down, up, down. Now she's going back up again. Do you like it? That's a big question. Do you like UNH? All right, well, what does it normally do this time of year? Well, that's pretty plain to see, don't you think? Okay, if we're right here, not the greatest incline in the world, but up is up no matter which way you look at it. And that kind of up, well, that's kind of nice for covered calls, calendar spreads, other spreads, if that's what you're into. Well, I like covered calendar. I like covered calls. They're simple, they're easy, they're quick. I know what my profit's going to be. I just get in, get out. Thank you very much. Have a nice day. That's what I'm looking for. Let's move this back over here. Get out of this. All right, there we are. Okay, so the 365. 365 right there. Okay, so 365. Let's see what it looks like. One contract at the market. There we go. And here we go. Well, let's take a gander. Okay, buy one covered call, UNH 100s, 24 October 25. That's this coming Friday. Okay, the 365 call option against the stock. 597. Well, it's a bigger profit because it's a bigger dollar stock. Okay, $36,000 for 100 shares. That's what UNH is going for. So let's do the profit there. Okay, the profit's 597. The investment is 35,903 for 1.66%. There you go. You know what question's coming next. Do you like UNH? Is this something you want to buy and hold on to? Well, kind of makes sense, doesn't it? Do you like this company? Okay, I'm going to whip up a chair. I'll pull up a chair and answer some questions, because apparently we got a whole bunch of questions. Well, let's get comfy. Okay. All right, what do we have? Delaying, I'm here. AAL, we just looked at that one. All righty. Liquidity Grooves, how are you today? My guy, what's going on? AB, you've got me interested. Well, all righty then. Okay, Chief ETW, Amazon. Amazon doesn't have any, okay, hold on. AC Medical Coding Education, 1% of what? That's a weird question. What do you mean 1% of what? All right, if I had $10, 1% of $10 is 10 cents. If I had $100, 1% of $100 is $1. If I had 100,000, 1% of 100,000 is 1,000. If I had 1,000,000, 1% is 10,000. 1% is 1% no matter which way you look at it. So why do you care 1% of what? Whatever you got, 1% a week is 50% a year. Say, if you got 50 grand, 1% a week is 25,000 a month, 25,000 a year. Give or take if you get 1% every week. All right. Chief wants to take a look at Amazon. Let's get out of this. All right. All right. Chief wants to take a look at Amazon. Now, I don't do Amazon, AMZN, for a couple of reasons. Okay. Reason number one, they're not profitable. They don't have any dividends. Okay. I watched an interview on, with, what's his name? Jeff. He says, no, we've never had a profit. But they do so much in revenue and so much cash flow rolling, they don't need to make a profit. Okay, that being said, all right. One of the rules is never sell at a loss. Does that mean your covered calls always has at least be the original price you bought it at? That would be kind of not taking a loss, correct? All right, can you shout me out? Okay, Jared, how are you today? Thank you for teaching. You're welcome, Jared. I appreciate you. Thank you. Bradley, anyone with a brain wouldn't go to YouTube for trading advice. And he knows this. Absolutely. You should never listen to some bonehead on YouTube. Never. Even me. What the hell are you doing here? Okay, I'm just giving you my opinions on certain stuff. I'm not giving any advice, which he's right. You shouldn't listen to anybody online. You should do your own research. Is what I'm saying making sense? I'm not telling you to buy anything. I'm not telling you to do anything. I'm just saying, does it make sense what I'm saying? That's all. Bradley, do your own research. Do not advocate for cheap traders like this. Thank you there, Bradley. You can do better. Absolutely. I'm going to agree with everything what Bradley says. What's your point, Bradley? Okay, you have to have gotten something out of this other than just, put in your 2 cents. What's that? Kaysen? Okay, one of the rules is never sell at a loss. We already did that question. Where do you go, Bradley? Already lost. Sorry, AZ. Kaysen, yep, we got that question already. Larumi, Stocks RMG from Bangladesh. Not sure about that one. Daniel, $33 profit for 1,000. I can do better with crypto in 2 hours. Daniel, I'm 100% sure you can. But Daniel, the thing is with crypto, you got to sit in front of your computer all day. See, in crypto, that has no historical performance to it. Has nothing behind it. You got to wink at a nod from some guy on the other side of the planet. Sorry, there's no guarantees with crypto. Crypto has nothing behind it. At least companies we're looking at run the American economy. Okay, you got McDonald's, you got Ford, you got General Motors, you got IBM, you got Exxon Mobil. Okay, I can go on and on and on. But you're right, you can make more. You can, not everybody. I couldn't, I know nothing at all about crypto, and I have no desire to learn. But thank you for that, Daniel. Bradley, same stream on multiple platforms to rake in the highest amount of monetized views. If you'd like to avoid this, please block this guy and hardcore research into quant analysis. Well, Bradley, we see what your game is. Nothing wrong with that. Everybody's entitled to their opinion. Thank you for that, Bradley. I appreciate it. Yeah, you should. You should do your own research. Never blindly listen to anybody on YouTube. Even Bradley. You don't need to listen to him either. Okay, it's not what I'm saying. And I'm not trying to sell anything. As a matter of fact, Bradley, if you want me to show you what I make on TikTok, for 2 hours, I make about 2 cents. Sometimes 3. Seriously. And I'm not making this to sell anything. Okay, I'm making this for my children and my grandchildren because at some point in time, I'm going to be gone. And then this is all they're going to have left. How did, excuse me, how did Papa G make his money? That's what they're going to ask. And then their parents will say, yeah, well, here are all the videos. Here's how you can do the same. It's not that difficult. It was created for my youngest daughter. Okay, she wanted to learn how. Great, so I taught her. And all I'm doing is just passing along the information. That's it. Not trying to sell anything, Bradley, and I'm definitely not looking for that, what is it, 10 cents per million views? Really? You really think I need that? No. But thank you. Kaysen, you asked the question 4 times. Bradley, if you're not like, move on. Thank you there, AC. I'm protecting the innocent. Thank you there, Bradley. What advice would you give for dividends for a 30-year-old? 1, never buy something you don't want to own long term. 2, never sell at a loss. 3, make sure the company's consistently profitable. Now, I'm not quite sure if you're going to go buy 4, because 4 is weekly options only, and I don't know exactly what it is you're trying to do. See, I'm looking for 1% a week to supplement my income, regardless of what Mr. Bradley says. I'm trying to supplement my own income. All right? So, with that being said, what can for you, because I have no idea what it is you're looking for. See, for me to give you advice, I need to know more information about you. And you just being a digital imprint on my screen, I know nothing about you. And me giving you advice would not serve you well at all because I know nothing about you. Now, if you want, you can drop your number and I'll give you a buzz and we can sit and chat. Because this is not for everybody. It's slow, it's boring, it's monotonous. It's the same stocks over and over and over and over again. But you know what else? It's also consistent. It's predictable, and it's one of the safest trading strategies I know. So I've been trading for over 30 years. And when my 9-year-old back in 2008, wanted to learn, okay, fine. But it only took me a couple of weeks to realize she kept making money. She averaged about 5% per month. And I'm thinking to myself, I'm putting all this time and all this effort, and here she is doing better than I am. So I reevaluated it, tweaked it a little bit. Now that's basically all I do because it's simple, it's easy, it's predictable, it's consistent. And if you do it right, no way to lose. Well, I like that. Do not keep looking here. I'm spreading awareness on people like this. Do not look at people like this. Thank you, Bradley. I love happy people. I do. Daniel, the algorithm is going to look for liquidity. Now, are you assuming liquidity in the stocks we're talking about, or what liquidity are we talking about specifically, if you can be more specific? ENB. Now, I don't do ENB. I have someone who asks me about ENB every single week. ENB. And the reason why I don't do ENB, Enbridge, is because it's a monthly optionable stock. I don't do monthlies because for 2 reasons. Number 1, it's very challenging to find out where a stock's going to be in 30 days. Okay, and that right there is 30 days. Okay, 30 days ago, she goes up, she goes down. Great. Now tell me where it's going to be in another 30 days. It's not very easy to figure out where a stock's going to be in 30 days. 5 is difficult enough. Between Monday and Friday, I like to be in on Monday, out on Friday. Well, great. That works for me. I just don't do monthlies because they're just not as profitable. Ricky, are you day trading? No. If so, I wonder if successful traders have more intuition and conviction than a strategy they follow. It's an excellent question. No, I don't do day trading. I like to jump in and jump out. I have better things to do with my time. Now, you younger people may not realize this, But as you get older, the way you look at the way you spend time totally changes. I'm not chasing the mighty dollar anymore. Okay, I chase opportunities to be with my kids, to be with my mother, and to be with my grandson. That's what drives me. Okay, why am I doing this? Because I'm going to be gone in 10, 20, 30 years, and I want something left behind so my children, my grandchildren, my great-grandchildren, oh, that's my grandpa? Oh, he looks good. Whatever they say. Hopefully it's good. Okay? Bradley, only day trade if you have the appropriate training. Do not listen here and do your own research. Bradley, you say the same thing over and over and over again. This is option trading. Boo to you. Yes, it is. Okay. Okay, Vic Jr., Lyft, Lyft. Now, I can tell you right now, Lyft has not been around for 20 years. Now, Luke has got a question. What kind of question you got here, Mr. Luke? All right. Luke wants to take a look at AT&T. Well, let me look at Lyft first. Now, even though I know Lyft hasn't been around for 20 years, because when I say I want companies that are consistently profitable, I like 2 decades. Now, 2 decades is 20 years. That's what I like. Oh, boy. I'm going to have to get rid of him because he's just not a nice person, I suppose. There we go. All right. So we got a lot of questions over here on TikTok. So before I go to TikTok, let's take a look at Lyft. Even though Lyft has not been around long enough. A year ago, 14 bucks. Shoots up, drops all the way down to the bottom at $9.60 in April. So from $9.60 in April, she shoots up all the way to, what is that right there? $23.50 is the high. Well, that's a nice jump. That's over 100%. Okay. So the last 30 days would be right here. Okay, so here's your last 30 days. Shoots up, pulls back, goes up, back down again. See, up, back down. Now she's going up. I like 2 days to the upside. Then on the third day, I'll jump in. So not quite here yet. Here's the bottom. She went up. She pulled back. So now we only have 1 day. So no for Lyft. Not for this week anyway. So what do we have here? 99. Oh my goodness. That's a lot. Okay. What do we have? Lots of highs, hellos. Oh, thank you. Oh, AK. All right. Hey, Rich Bruner, were you boat hunting yesterday? No. Yes, I was late. No, I wasn't late yesterday. I was sick as a dog. I went and played soccer yesterday morning, and I got heat stroke. Okay? So I had to leave the field early. I never leave the field early. Okay? Like 3/4 through the game, it's like, oh my God, I just couldn't catch my breath. It's like, what the heck is this? So for the last quarter of the game, I was on the side. I wasn't even watching the game. I was in the shade trying to get cool off. So yeah. So that, and then I spent the whole day in bed yesterday. And most of today too, which is kind of nice. What stock do you like the most? I would have to say Macy's, Kohl's, Nordstrom's. Oh, I haven't looked at Nordstrom's in a while. But those are the ones I like the most, ones that are low and pay a nice premium. How about Reddit? Joe, I'm terribly sorry, Reddit's not profitable. You can actually go and look at the profit and loss statements for Reddit. It's not a profitably run company. So why would you invest? You know what? You do what you want. Me? No, thank you. I've seen the numbers for Reddit. No, thanks. All righty. What stocks like this week? Okay, blah, blah, blah. Crush Rich Bruner. All righty. Oh, here you go. Prove that I'm human. First, they don't like what I say. Unable to verify. Please try again. Oh, apparently I'm not human. There we go. All right, got that one right. Oh, thanks for the advice. It's not advice, Joe. It's an observation. Okay? All you got to do is just go to a financial website and do a little bit of research on Reddit. Matter of fact, you should research every stock you buy or plan on buying. Is this the best place? That's the question you should be asking. If I give you 10,000, can you invest and take 10% of the profits? No, I don't really do that. Sorry. I'll be 18 on the 30th of this month. I'm trying to get. Okay, well, when you turn 18, you come back and talk to me. I can't really talk to people that age. It's just inappropriate. Rich Bruner, I see you on TikTok. Not yesterday, you didn't. I'm watching you on TikTok. Yay! All right, thank you there. Liquid, Silver Strike, and Hammerhead. Wouldn't it be better to do an option? Or is that too risky? Ooh, Liquid Silver Strike, you're absolutely right. Options are more profitable, but what you're missing is with more profit comes more risk. Now, when I first started, I was 100% in options. I made a bunch of money. I did. And then, yep, you guessed it, I lost a bunch of money. Because where great risk is also great reward. So, I look at options, and 80% of all options expire worthless. So why would I want to buy them? Would it make more sense to sell them and be on the 80% side? I mean, think about it. You got an 80-20 split. 80% lose and 20% win. Wouldn't it be better to be on the selling side? And that way you'll be on the 80% side rather than the 20%? So liquid Silver Strike, you're right. Options are more profitable, but they're also more risky. Make it happen, Miller. What's happening? All right, what do we have here? Our phone call at once. Oh, you signed up for a phone call. Cool beans. I'll give you a buzz. Censored. Yeah, Dino, it is censored. Certain things I can say and certain things I cannot say. You write another call next week, and then the stock goes up $20 and it's called away. And what's your point? Think about it. What's your point? If I buy the stock, let's say I buy it at 20, 21 right here. I sell an option for someone to buy it from me, and I collect my 1%. And then the stock jumps up $20, and someone takes it away from me. Well, I got my profit. I got all my money back. I'm not seeing the problem there. Make it happen. Yeah, AMD is a growth stock. I'm aware of that. Okay, somebody wanted me to take a look at it, so I take a look. I didn't say I liked it. Okay, I don't buy AMD. Uh-oh. St. Martin, RR. I've heard that one before. It's always been a no. Okay. So this thing's at 50 cents a year ago. Now, let me ask you a question. Who came up with this one? Okay, St. Martin. If this thing is 50 cents a year ago, okay, last November, how can it possibly have 22 decades of profit at 50 cents a share? Kate, we already looked at Verizon. Okay, it was a no because the numbers were terrible. Luke wants to take a look at AT&T. All right, here we go, Luke. Ooh, interesting. What's going on here? I want to zoom in and take a look at that. Okay, so the high of the year, the low of the year. Look at it. It jumps up, pulls back. All right, what's going on? What is going on? Okay, 30 days ago, we're at the 30-day high. We drop down. Here's the bottom. Shoots up. Now, she went from 25.50 to 26.50. That's not even a 5% increase. Okay, but she started dropping today. So why? Think about it, Luke. Why? Why did it drop today? Okay, it should have kept on going. The bottom's here. Should have kept on going, but it didn't. Is it still going to be in this downtrend? And this here is just a little anomaly? Could be. What else we got? Oh, Happy Girl wants to take a look at Nike. NKE. Now, I actually have some Nike. All right, so here we go. A year ago is the high of the year. Here's the bottom. That's where it was. Okay, she drops, shoots up, back down. What's going on here? Okay, she's here. She drops down. Now she's going back up. Let's zoom into that, see what it looks like. Here's our last 30 days. Right? She drops, shoots up, bottom. Here's the bottom right here. She does the same thing that Nike, that AT&T did. Hits the bottom, shoots up, pulls back. Now she's going up again. Not quite ready to jump in yet, even though I already have some. Okay, St. Martin, we already looked at RR. Uh-oh. C wide spinner wants to take a look at Hertz. Dino, James, can you move your phone towards the chart? Can't see the beginning of it. Move the chart. Oh, like that? All right, there we go. Hertz, let's take a look at Hertz. HTZ. Okay. Now, I got rid of my Hertz a while ago. I don't think I have any more Hertz. But we did have it for a while because the numbers just looked too good to pass up. So you get the high of the year in April. The bottom of the year last November. Shoots up, goes sideways, pulls back down. Look at where we are now. Dropping, 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 dropping. Here we are right here. Okay, here's the bottom. What's going to happen? It's going to find a bottom pretty soon, turn around, shoot up. Well, I like Hertz because the numbers look good. But I'm waiting for the bottom. Okay, this ain't it. It could be, but we'll check tomorrow and see what it's like tomorrow. Does it go up? Does it go down? What does it do? That's going to tell me, is it a good buy or not? No. Dino, it always in this spot. He won't move it. Oh, what age did I retire? 59. Specs, Intel, INTC. Who's asking? Dino. Okay, so Dino, just to let you know, okay, this right here is live on YouTube. You go to the big screen TV in the other room, pull on the big screen TV and look at it on on YouTube without me even being in the picture. I don't think I'm in the picture. I don't know, who knows? Okay, so Intel's next. INTC. No. Wait, why would I buy it at the high? Look at this. You got a big gap here. Shoots up, goes sideways. Here's the time to sell, not the time to buy. It's just my opinion, okay? King's Mattress Gallery. I retired at 59. Buffett likes UNH. Ooh, we looked at it. Oh, do you do covered calls and CSPs? Okay, that's CC is covered calls, CSP is cash secured puts. Yes, I do. Thank you, Gustav. Thank you there, Heidi. St. Martin, thank you for everything. Can you look at, okay, St. Martin, I looked at it a little while ago. Okay, if it has 50 cents last year, no. Can you take a look at PayPal? I'm a little late today. Hey, Fufu, how are you today? PYPL. PayPal. Okay, well, here you go. There's PayPal. Kind of going sideways for the last couple of weeks. Okay, top, bottom, where it was, where it is. It's up, down, up, sideways, back down. What's going on here? What is going on there? Well, 30 days ago, we're here. Bottomed out there, shot up. Here's the top. Here's the new bottom yesterday, also known as Friday. And today's one day to, oh, we got Friday and then we have today. That's 2 days to the upside. So tomorrow, if it's going to be higher than today's close, which is 69.20, if she's higher tomorrow, that would be a good jumping in point if the numbers work. Well, what are the numbers? 69.23, the 69s are going for 120. Well, that's over 1%. It's close to 2. Not quite, but close. Like more like 1.5, 1.75, something like that. If you like PayPal. Always weird. If you like it. Okay. What other questions do we have? Luke, wouldn't you need like $250,000 in Starbucks to make $100 a week off of dividends? Luke, you are misinterpreting what I am doing, Mr. Luke. So let's take a look at Starbucks and let me give you an idea. Okay, Luke, because $250,000 would be about $2,500 a week or $10,000 a month. That's 250,000. Okay? 250,000, 1% a week is 2,500 a week. 4 weeks in a month, that's about $10,000 a month. 250 grand. Luke. Okay, so let's take a look at Starbucks. See, PayPal, we're going to wait another day because I like 3 days to the upside. Say 2, which is yesterday and today. Tomorrow, if it does look good, jump on in. So what do the numbers look like? 69. All right, 120. Well, let's take a look. Change this to covered stock. Do the 69 right there. One contract right there. And here we go. Let's jump up out of this seat to find out exactly what it looks like. Now, don't go away, Luke. I'm going to give you an example on Starbucks in about 2 seconds. Let me finish up this one first, okay? Gotta love it. All right, so buy one covered call, PayPal, if you like PayPal, of course. 24 October, 25, that's this coming Friday. The $69 call option, the stock at the moment is $69.20. And if I'm doing the 69, selling it less than what I paid for it, how can I possibly be walking away with $104 per contract? Well, hold on. What is $104 per contract on this stock? Calculator, 104.50. And we divide it by the cost of the trade, including commissions and fees, $6,700. Okay. 67.96 comes to a grand total of 1.5%. 1.5. Well, think about it. If 1% a week is 50% a year, 1.5 has got to be at least 75% a year. Well, I don't know. Do you like those numbers? It's a simple question. Sorry, I had to move my foot map. Foot mat. All right. Anyway, Zion, user 6111 wants to look at Zion. What the heck is Zion? Never even heard of it. Zion, Z-I-O-N. Now, who came up with that? So user 6111. I don't do monthlies. The numbers just don't work. Not for me anyway. You like them, you do them. I don't like monthlies. The numbers just don't work. Okay, so Luke, over to you. Now, before you guys say anything, okay, I have 9 platforms. 9, okay? So, that being said, let's see what we got going. That being said, alrighty. I'm not doing Zion. We're going to do Starbucks for Mr. Luke Earnshaw. Luke, here we go. Luke, I'm sure you heard that all the time. Luke, I am your father. Anyway, why did I put Luke in there? Starbucks, S-B-U-X. Interesting. Now, I do have some Starbucks, just in case you're curious. What am I looking for? Always, every time I look at a chart, always the same 5 things. The high, the low, where was it? Where is it? What's it doing? Up, down, up, down. Now she's going back up. Or is she? What happened today? Well, let's zoom in, take a closer look. But before we do, it's at 84.50. The 85s are going for 97. That's over 1%. So the numbers work. Remember Rule 5? Make sure all the numbers work. What am I buying it for? What am I selling? What am I collecting? Well, it's over 1%. That works. Last, not 30 days. Let's look at the last 30. Okay, easy to see. 5 things. You ready? The high, the low. Where was it? Where is it? Okay, it went up, down, and now it's going up. Well, how much further does it got to go? Look at where it is. The high is right here. And we're here, we're here. That's only like $1 left to go. Is it worth it? Is it going to do it? I have no idea. Now, I bought Starbucks a couple of weeks ago, so, I'm pretty much okay with my Starbucks. But to jump in now, the bottom's here, 78. She jumps up to 87. So 78 to 87 is $9. Well, that's over 10%. Count it. From here to here is over 10%. So apparently it looks as if it could be possible that profit taking has started today. Okay, because she opened up here, made a high here, a new high, but now she's going down. But But, it's always a but, isn't there? But we have a higher high and a higher low. Here's another but. Okay, even though we opened up higher, we closed lower than yesterday. So does that count as an up day or does that count as a lower day? Because she closed lower today than she closed yesterday. Now, when I say yesterday, I mean Friday. Okay. Now, that being said, so Luke, you think you need $250,000 today to make $100 a week off of dividends. Well, I don't do dividends. I use the dividend to tell me, I'm going to show you something here, Mr. Luke. Okay. All right, Mr. Luke, this here behind me is called an EX dividend calendar. Basically a calendar like you see everywhere, except for this one has little green dots. Now, each one of these little green dots has a name that goes with it. Ben Franklin, Illinois Toolworks, Nucor, ADP, Cahill, well, not Cahill, Cardinal Health, Fortis, O'Reilly, Roper, General Dynamics, Colgate, Palmolive, so on and so forth. These, okay, Mr. Luke, are companies that have been consistently profitable for a bare minimum of 25 years. That's a quarter of a century. Every single year, more and more profits. So why do I look these little green dots? Well, the green dot represents the EX dividend date. Now, I'm going to explain to you why that's important. Because anytime you're dealing with dividend stocks, there's 4 dates to remember. 4. Date number 1 is what's called the announcement date. That's basically when the company says, hey, everybody, this is James from Dividend Stock Talk. We made so much money this year. This is how much you're going to get. This is when you're going to get it. And this is going to be paid out. It's going to be wonderful and dollar. Yeah, all right. That's the announcement date. That's it. Just telling you what they made and how you're going to get yours. That's all that is. Date number 1, the announcement date. Date number 2, the EX dividend date, represented by these little green dots. The EX dividend date is the last day the stock trades before you get the dividend. So if you want to collect the dividend, you're going to buy it before the little green dot. Okay, this is Lowe's right here. Clorox. So if I want to get a dividend on either one of these, I can buy it on the 21st, the 20th, the 17th, the 9th, the 3rd, the 1st, the 29th. Any day before this date. That's the EX dividend. That's why it's important. Now, why else is that important, Luke? Because just before the dividend is paid, stocks have a tendency to increase in price, to go up in value. By knowing when a stock is going to move, especially on the upward direction, you know something that a lot of people don't know or don't know where to look to find it. So if the stock goes up before the EX date, I jump in and do a very simple, safe, predictable trade. I can safely get 1-2% every single week. I'm only looking for one. One makes me happy because it's easy. It's simple. Less than 5 or 10 minutes. That's the reason why I was called the 10-minute trader. My daughter was 9 years old. It had to be simple. And how long can you keep the attention of a 9-year-old? About 10 or 15 minutes. That's about it. 10 minutes. That's all she needed to do. So from the day she asked, Daddy, can you teach me? Her life changed by getting up 10 minutes earlier. Because in the morning, brush your teeth, do your hair, have your breakfast, get ready for school, sit down, do your trading. You want to learn? Well, this is how you do it. So she did. She got up 10 minutes earlier, and then we traded together. Okay, we actually have videos of me and her all the way back in 2011 and 2012. Go check out YouTube. Over 1,200 videos we have. We've been doing this for a while. Anyway, so Luke, date number 3 is called the date of record. Whoever owns a stock on the date of record is entitled to the dividend. Date number 4, the payment date, self-explanatory. So why is this important? Because knowing when a stock is going to move is huge. But what do you do with that information? That's where the EX dividend comes in. That's where the covered call comes in. Because just by knowing when a stock is going to move is only half the battle. What do you do with the information? Think about it. I've asked the question to many, many people, and 95% of them all say the exact same words. And I always say, that's not what I would do. Because most people, if they knew a stock was going to go up, they'd buy the stock. Because that's what they've been trained to do. Now go ahead, buy the stock. It's a simple, safe trade, but you have to wait for the stock to move up. And who knows how long it's going to take to move up, and who knows how much. And then when do you decide to jump in or jump out? So for me, it's easy. If I like Caterpillar, which has a dividend, today, Caterpillar. Okay, today was the EX date for Caterpillar. So if I like Caterpillar, I would have bought it probably the 6th, the 29th, or the 6th, 2 weeks before. Give it some time to move up. Jump in, jump out, get my profit, say thank you, then move on to the next one. It's actually that easy. All right, next. So hopefully that made sense, Luke. So let's take a look. Let's take a look at Starbucks. Okay. So, Luke, 250,000, huh? Really? So, if, hypothetically, Luke, I buy Starbucks tomorrow morning, $84.71. Now, let's say, hypothetically speaking, I use your numbers, $25,000 worth, or $250,000 worth. Let's do this. 250,000, okay, divided by 85 bucks. Let's just round it up. 85 bucks. 85. So I can buy 2,900 shares. Okay. So let's do it. 2,900 shares. That's 29 contracts. Okay. So here we go. Let's do this. Do that. And the 85's right there. And Luke, like you said, you wanted to do 250,000, that's 2,900. So 29. Okay. 2,900 shares. Okay. So here's what it looks like, Mr. Luke. Now this is just for 1 week. Okay, remember, just 1 week, 250,000. What's 250,000 going to get you for a Starbucks option? Buying it at $84.50, selling the 84s. What it's going to give you, Luke, not $100. It's going to give you $4,292. What's it going to cost you? $242,000. That's just for the week, for 1 week, and then you can do it again next week and the week after. $4,200, and you're thinking you could only make $100 with 250,000? No. See, whoever told you that hasn't told you the whole story. And why is it that they didn't tell you the whole story? Because options can be very confusing if you don't understand them. So let's keep on going. Foo-foo. Can we take a look at PayPal? We already did. Mr. AJ, how are you today? All right. Does your daughter still do any covered calls? No, she does not. Be totally honest with you, when she turned 13, I was the devil with the ATM card. That was it. When girls hit puberty, forget it. Sorry. Now that she's 26, she's slowly coming back around. Wait a minute, Dad might be onto something. The other reason is because when she was growing up, she had everything she needed. She didn't need money. So, that being said, didn't make any sense to her to keep doing it because she got everything she needed. Well, now that she's living with her boyfriend away from home, she's realizing, well, didn't we just pay this bill last month? Why did we add it again today? She's realizing that she has to trade her life away just to live comfortably for a few hours a day. And I try to tell her, hey, profits are better than wages any day of the week. And she's finally coming around to it. So that's the answer to my daughter. Yeah. So we traded for about 4 years, 3 or 4 years, and then I was the ATM devil. I should look at Dillard's. Okay, Quizo, DDS, I think. Okay, let's take a look. DDS, you say? DDS. It is Dillard's, and Dillard's has no options. So remember when I said rule number 4 is weekly options only? So Quizo, no. Okay, zero delay. We already looked at UNH today. Gaddy, what's happening? What's the best dividend paid stock to invest in? You're asking the wrong question because I don't know who you are. I know nothing about you. I like the dividend kings, the dividend aristocrats, dividend champions, dividend contenders, and anything on Warren Buffett's list. That's what I like. All right, Jen. Jen wants to know how many stocks I usually get into on Monday. Well, today I think I only bought 3. I think Ford was one. Texas Instruments was another. What was that third one? I forget. Citigroup. I think it was Citigroup. All right. Poor man trading. When the option is not exercised and you still have the stock Monday, you just renew the option? Yeah. Why not? Because until you sell your stock, you can do an option every single Monday. Think about it. 1% every single week. You buy a good company, you sell somebody the rights to buy it from you for the exact same price you just paid for it, and collect on that insurance premium, which is always going to be over 1% if you do it right. That's 1% a week. That's over 50% per year, if that makes sense. Okay, PMAX, we really looked at BYND. Chance Lake, what's happening? Rich Bruner, thank you for that. C-Spinner, will you please check our good old friend Kohl's? Yes, I did buy some Kohl's this morning too. I bought a shitload of Kohl's this morning. I did. I think it was like 200,000 shares. That's a lot. Or was it 20? No, it was 20,000 shares. Sorry. I bought 20,000 shares of Kohl's this morning. KSS. There it is. Take a gander. The high, the low, where was it? Where is it? What's it doing? Down, up, down, up. Well, that kind of makes sense, doesn't it? What's the price? 16.17. 16.17, 16.17, 16.17. What do you think? You think the price is 16.17? Yeah, it is. So if I buy it tomorrow, 16.17, I can sell the 16s, pick up 57 cents. Do the math in your head. That's over 3%. 60, over 3%. Well, let's take a look. Take a gander at this baby. The high of the year, 21.25 last year, bottomed out the middle of April. $6. Hold on, I gotta stop here for a second. $20 drops down to 6. That's more than a 55, 60% drop. And then she shoots back up again. Drops again. Now she's going back up. Oh, great. What's the last 30 days? Last 30 days. Oops. Well, here we go. Last 30 days. Now, the reason I look at the last 30 days, it gives me a good idea of where it's going next. Okay, 30 days ago was the high. She drops, retraces, drops, retraces, going up. The high right here. Look at where we are. We have all that room to go. So can it go up? Yeah, it can. Is it going to? We will see. Okay, it's not guaranteed. There's only 3 guarantees in life, and this ain't one of them. Okay, if you think this is guaranteed, no, it's not. Okay, sometimes you win, sometimes you lose, but it's best to stack all the odds in your favor. And what are those? Well, if you know when a stock is going to move, well, that's great. That's in your favor. If you're doing a safe trading strategy, that's in your favor. One thing I like about the covered call, if it goes up, I make money. If it stays the same, I make money. And if I do it just right, the stocks can even come down a little bit, and I'll still make money. They only go 3 ways, up, down, sideways. But if I get all 3 bases covered, well, 2.5. If it goes up, great. Sideways, great. Down, just a little bit, I'm okay. I always take a look. What am I buying it for? What am I selling it for? Where's it at? Where's it going? What should I do? They're all easy questions. So Kohl's, 16, 17. Let's do the 16s for the fun of it. Let's see what that number looks like. Covered call, 16. Okay, just one. Okay, so you get an idea of what one looks like, and you say, all right, I can afford to do 23. I can afford to do 72. I can afford to do 7. I can afford to do 2. We're all different. We're all on a different path. We all have a different amount of money at our disposal. Always keep it safe, simple, predictable, consistent. It's really not that difficult. It was created for a 9-year-old. I don't know why adults have a tendency to make it more complicated. Buy covered call of Kohl's, 24 October 25. That's this coming Friday. The $16 call. Look at this. I'm getting 45 bucks. I know you're thinking 45 bucks is not a lot. No, it's not. But here's the thing. It's only cost me $1,500. Well, let's see what those numbers look like. Okay, so $45 profit divided by the cost of the trade, including commissions and fees. Okay, including commissions and fees right there. $1,555. Okay, well, this is paying 2.89% for 1 week. But if you have it on margin, think about it. Margin allows you more of a rate of return, because look at this. The margin requirement on this is 1,000. All right, it's not that great, but still, you get a better rate of return. I don't suggest people do margin because it's very risky. Uh-oh, it's 10:37. Wow, the time is flowing. So, Luke, I hope that made sense to you. I do. But thanks for coming by, Mr. Luke. What else do we have? Thank you there, Mr. Grant. Fires. What is my opinion on Tesla? My opinion on Tesla. Well, to be 100% honest with you, who was that? Fires Dewood. Okay. My honest opinion about Tesla. TSLA. Okay. I don't do Tesla. The reason being, Tesla has no dividends. It's very challenging to find a stock that you like, but has no blueprint. There's a good one. Has no blueprint to it. What do I mean? Well, stocks that have dividends, they pay a dividend every 90 days. So we can see how they react to those dividends. And they usually go up right before the dividend is paid. Well, if a company has no dividends, well, how can we project when are they going to move? And how can we project when they're going to do it consistently? Well, because we know IBM pays a dividend on whatever week it is, but it always goes up just before that week. So we always know what a dividend stock is going to do, but a stock that doesn't have dividends, there's no predictability to it. It's not a, what do you call it? It's not a predictable stock. So no, I don't invest in it yet, but I'm going to, because I can't run from it anymore. Think about it. Okay, the man is doing so much and he has so many other plans that in 200 years, you're going to say, who was the first man to get to Mars? Well, of course, it was Tesla. So you can't ignore it forever. I just got to find a way of how can I do it predictably. Eric wants to take a look at Halliburton. TikTok Paul. Do DMLP. What is that? DMLP? DMLP. Dorchester Minerals. Hell no. 2 reasons. 1, way down here. 2, I don't do monthlies. Monthlies just don't pay. Okay, they just don't pay enough. If I get 1% a week from a company that does weekly options, why would I want to get less money doing a monthly option? Okay, Eric, Halliburton, HAL. Interesting. Okay, uh-oh. Okay, here's the high of the year. Here's the low of the year. Here's where it was a year ago. Here's where it is now. She went up, she went down, she went up, she went down. What's going on here? 22.62. That's the current price. Now, do you like Halliburton at 22.62? Well, the 22.62, the closest one is going to be 22.50, and that's paying for 60 cents a share. Does it make sense? Think about it. Do you like Halliburton? Are you willing to buy it and never sell it until it reaches its goal? Well, what's the goal here? Well, the goal here is 22.50. Right now it's at 22.62. That's more than 22.50. So yeah, I get in, get out within a week and get whatever this profit is right there because it's well over 1%. That's all I'm looking for. Simple, safe, consistent, 1% a week. And I want to do it less than 10 minutes a day. I have no desire to sit in front of the computer looking at this crap all day long. Now, don't get me wrong, I could. And I could make a lot of money doing that. But that's not what I'm looking for. I'm not looking for a lot of money. I'm looking to pass along the information I've accumulated my whole life. Okay, I find it to be a sin to take everything that I've learned to the grave with me. What good does that do society? None whatsoever. And how am I supposed to build some kind of empire for my children to inherit? It is what it is. Let's keep on going. Can you do NBIS? What is that? NBIS. 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 Nubius Group. Okay, I'm going to say no only because the high of the year was here. Now she's dropping, looking for a new bottom. Well, where is the new bottom? Well, we don't know until it shows up. When's it going to show up? It's going to show up when it's damn good and ready to show up. I mean, think about it. Stocks go up until they're done. When they're done going up, they turn direction and they go back down. Well, they go back down until they're done going down. It's actually that simple. People think there's a rule to it. No, there isn't any rule. When the buyers and sellers stop buying and stop selling, that's when it changes. Okay, so if we buy and it goes up, 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 well, there comes a point where we say, no, I don't think it's worth more than 140. I'm going to take my profits. What happens? She starts dropping. And then she'll keep dropping until we say, wait a second. NBIS at 80, at 90, that's a good deal. And then we jump in, buy again, and then it goes back up. It's a repeating process. That's why I call it a merry-go-round. It goes round and round and round. Okay, where you jump on, jump off. Okay, Robbie. Oh, Robin. Robin, J-O-B-Y. What is that? J-O-B-Y. J-O-B-Y. Joby Aviation. Never heard of it. But, hey, I guess someone likes it. Okay, 1750. 1750 is going for 65. Well, hell yeah. That's a nice number. Well, let's take a better look. A year ago was the bottom. 469. 469 a year ago. She shoots up to the high of the year at 2095. Well, pulls back, blah, 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 this, that, the other thing. You know how it goes. You like that, this, that, the other thing. I don't know. There's no real direction here. Okay? Here's your high. Here's your low. Here's where it was. Here's where it is. She shoots up, pulls back, shoots up, pulls back. Now she's going up again. 1743, the closest one is going to be the 1750, and that is going for 65 cents a share. Well, 65 cents a share on a $17 stock, well, that is definitely over 4%. If you like it. 86 is in the house. What's happening there, dude? Uh-oh, 15 minutes. All right, let's get this thing out of here. Bring my chair. Last 15 minutes, we're going to be doing questions. Okay, superlative. Upside is capped to the strike price. But if you just keep doing a new covered call and getting a new premium. Yeah? What's wrong with that idea? Uh-oh, Jarf. Jarf wants to know why weeklies instead of monthlies. Oh, do I really have to go over this? Somebody always asks. Why weeklies instead of monthlies? All right, Jarf, you ready for this? Here we go. Currently, this is a weekly, JOBY, 1743. 1750 is going for 65 cents. Let's do a little math, shall we? Okay, Jarf, here we go. Calculator, if the profit here on this stock, this moment, is 65 cents per share. 65 cents per share. Okay, put the calculator. 0.65, and the share price at this moment in time is 1743. 1743 equals grand total of, you ready? 3.7%. Now, think about that for a second. 3.7% for 1 week. Okay, now, for the fun of it, Jarf, let's multiply that by 52 because it's 52 weeks in the year. Okay, so 3.7 multiplied by 52 comes to a grand total of 193%. That's a weekly. Well, now let's take a look at a monthly. Everyone's favorite monthly. Let's take a look at O-Realty. Okay, everybody loves O-Realty. November, December, January means I can only do this once a month. Now, let's do it once a month, okay? So the very next one is 21 November. Okay, right there, see 21 November. The stock price right now is $60.64. So what can I sell? All right, the 60 right here is going for $1.40 a share. Get that, Jarf? $1.40 per share on a $60 stock. So let's do some math. Calculator. $1.40 divided by the purchase price, $60.64. $60.64 gives me the grand total of, you ready? 2.3% for the month. Now, for the fun of it, let's multiply it by 12 and see how much we get on a yearly basis. Multiplied by 12 comes to a grand total of 27%. Do you see that, Jarf? Monthly, you're getting 27% for the year. Weekly, well over 100%. Okay, but wait a second. It actually gets worse for the monthlies. So let's see this here for a second. All right. You ready, Jarf? You're going to love this one. You ready? Here we go, Jarf. You ready? All right. This, my friend, is 30 days. Okay, this is today's date right here, 10/20. 10/20 right there. Okay, here's where we start. It goes up, it goes down, and it goes up. Great. Now, Jarf, tell me, where do you think this is going to be in another 30 days? Waiting. The reason I don't like monthlies, hold on, let's go back to that other stock. What was it? I forget what it was. Damn it, don't get old. It's no fun. So, Jarf, figuring out where it's going to be in 5 days, well, that's hard enough as it is. But trying to figure out where it's going to be in 30 days, look at this. Up, down, up. That's 30 days. Where's it going the next? It's not that easy. And the premiums are horrible. That's why I just don't do monthlies. It's just not worth my while. Okay, there's over 10,370 different companies to choose from. Why would I do a monthly when the numbers just don't work in my favor? Ooh, 10 minutes left. How much more can we do? How much? Private, sir, how much does a screen that you can write on cost? I have no idea. This is about $3,000. This one. All right, so we answered that question. 86 is in the house. Jeff, it's easier to predict stock movement over 1 week than it is over 1 month. Also, 1 week. Yeah, thank you there, winner 86. Yay! McLovin, Zim. Uh-oh, Zim. Somebody always likes Zim. Z-I-M. Zim. Here we go. So Zim, look at that. The high, the low, where was it? Where is it? Pfft, just down. Look at that thing. That's a slow. It's not up, down thing. This is just down. I mean, okay, fine. So where are we? Well, here we are right here. What does that look like? It doesn't really look like anything, actually. See, the high's there. Here's the bottom. Shoots up. Now she's going sideways. What? Where's it going next? It doesn't really say. Okay? Because it stopped right there and it stopped right there. So I would wait for a more clear signal on Zim. Superlative, Leggett and Platt, LEG. Nice. Unfortunately, it's a monthly. But look at this right here. She is in a nice little upward trend right now. See? Here's your bottom, and she's going up. But it's a monthly. I don't do monthlies because the numbers just ain't there. I mean, take a look. Take a really good look at them. They're just not there. The voice of wisdom. How much does a screen like that cost? Yeah, okay. What's your year to date? Okay, Ace, I got 7 different accounts, so you have to be more specific. Okay, the voice of wisdom. We already did that question. Foo-foo. Uh-oh, what did Foo-foo say? You think Smith wrong with that guy? I think. Okay. Foo-foo most likely. Spat. What the heck is spat? I never heard of that one. S-P-A-T. Symmetry panoramic alternatives. No. It doesn't even show up. Okay. Tumble spot. If you were to start with 10,000, what would you focus on? Dividend capturing. How much is, you already asked that question 4 times. Alex, great response. Coke or Pepsi? Uh-oh, Pat wants Coke or Pepsi. KO is actually on the list this week, believe it or not. It was. Take a look. Coke or Pepsi? Great choice. Which one? Okay, so Coca-Cola. High 74, low 61. She drops up, back down. Now she's up again. Look at this. Upward trend. 68.44. So we'd be doing the 69s, and they're paying 68, which is about 1%. Okay, what's Pepsi? PEP. Pepsi. Here's your high, 175. Your low, 125. Okay, she drops, shoots up, back down, back up, 153.64. The 155s. There isn't no 154. But either way, Coke was the better choice. It's the better numbers. What stock is this? Well, we just looked at Coke and Pepsi. I'm not quite sure which one you're talking about. Uh-oh. Alex, a very simple strategy. If he doesn't know what to do with the cash, it's study time. I'm not quite sure what he means by that. JARF, RR year is 1.4%. Then why the hell would I want to look at it? I'm looking for weekly. Weekly. 1% a week, not 1% a year, 1% a week. On weekly, you might get called. If you don't, means your MTM lower. Okay, Sambino. It's exactly what I want to happen. Here's the thing. You got 10,370 different stocks all going in the same direction. They all want to be profitable. They all want to go up. Well, guess what? They're not all going to go up at the same rate. So here's the thing. If IBM is going up, great. I want to jump on that and go for a ride. As soon as it gets to the top, starts turning around, I'm going to jump on 3M and take that for a ride. As soon as that one slows down, I'm going to jump onto Verizon. And then I'm going to jump onto Comcast. And then I'll jump onto whatever stock is next. I'm always looking for what stock is on the move to the upside. I'm looking for a simple, safe, predictable, consistent 1% per week. I honestly don't care if it gets called away from me. I don't. Because they go up. Look, They go up and then they come down. They go up, then they come down. They go up, then they come down. Then they go up, then they come down. So I'm just taking the run up. As it going up, I want 1% of that, just a little tiny sliver every single week. So this week, all right, so last week was a good one for Pepsi. You jump here at 140 and she jumped up. Well, great. I just want to go here, just that little tiny spot. And then I'll jump into Nordstrom's or Macy's. I don't stay in the same stocks over and over again. The longest I've ever held anything was 14 months. And that was Kohl's, because it's just kept giving me 1% over every single week. Jarf, should I borrow home equity to trade wheel strategy? No, Jarf, I don't suggest that at all. Okay, but here's the thing, Jarf. I first started with $12,000 from a home equity loan 30 years ago. Okay, I mortgaged my house, took out $12,000 to run the stock market. The wife was pissed, needless to say. Pissed. Gustav, do you cash secured puts? Once in a great while, not that often. Okay, MD Maraco, PSEC. No, I don't do monthlies. I already said that. Monthly, I don't do monthlies. The numbers just don't work. Jarf, I'm not going to tell you to borrow money against your house, Jarf. That's not a good idea. I have 800,000 home equity. Should I borrow 200,000 and do the wheel? Jarf, if I give you advice, it would be this, Jarf. Do not do that until you get really good at paper trading. What is paper trading? It's kind of like playing Monopoly. 3 greenhouses, 1 red hotel. This is the same thing. You buy a stock, do a covered call, all in virtual money. It's not real, but you're looking at the exact same numbers. You're looking at the exact same trades, and it looks real. But until you can perfect that, leave the equity in your home alone. Don't ever invest until you are 100% sure you're ready. Because if you've never done this before, it is very risky. Is this swing trade session or dividends? Okay, Chanel, this is dividend investing for weekly cash flow. I call it dividend capturing 2.0 because it has to do with dividend capturing, but the 2.0 has to do with the stocks and the options. Oh, nice. This is a good strategy. Well, thank you. I think so too. Why? 3,000 US dollars. You are rich. Thank you there, Private. Okay. Covered calls to claim premiums. Exactly. I have been doing the wheel strategy for 6 weeks on 40K, 11% so far. Well, that's pretty darn good. Okay, the wheel strategy works. Okay, but here's the thing. I don't teach the wheel strategy because I only teach what I taught my 9-year-old daughter. All right, so she was 9 years old. Explaining to her puts, not the simplest thing in the world to understand. Okay, now don't get me wrong, the wheel strategy works great. All right, back over here. What do we have for questions? Big Jace Bets. Can you name off your Dividend Kings list? Oh, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. So Big Jace, behind me, this right here, is being recorded right now. It's on YouTube live right now, but it's being recorded. So you can go back and listen to it anytime you want. Okay, UNH, we looked at AGL. What does AGL? Okay, keep on going. Wide weekly option for, we already did that one. What website are you using? Okay, WD is not a website. This is a trading platform called Think or Swim. What is your long-term rate of return with options? Over 50%, but thank you. AGL is monthly. Well, we're not going to look at AGL then, are we? Thank you there, Richard. Jarf, thank you. Crystal, can you look at BDN? What the hell is BDN? Never a good sign if I have to say what the hell is this. Brandywine, no. Okay, Crystal, I don't do monthlies. I already said that many times. Live restricted for some audiences. Your live contains themes that some may find uncomfortable and have been restricted. Reasons. Violates community guidelines. They say that every single time, but it doesn't tell me what it is. Okay, Vamp Millen, GSIT. What the heck is GSIT? GSIT. Hell no. It's a monthly, and then look at this. Okay, it's around $3 and shoots up to 18. Why are you showing me something that we can't do anything about? It already made the jump. Do you do swing trade? No, John, I am a weekly trader. When you get called away, do you just shift to a different asset? Absolutely. Someone on TikTok is, okay, thank you. Yep, more than likely. Why weekly versus monthly? How many times do I got to say? Weekly, I can get 50 to 100% a year. Monthly, I can get 12 to 24% a year. 36 if I'm lucky. Weekly trader, why is dividends in your name? Because, Colton, I look at the dividends to tell me when the stock is going to move. Hey, hold on. Colton, take a look at this. Okay, Colton, this is an EX dividend calendar. It tells me when every stock is going to pay a dividend. So if all these companies pay a dividend on these dates, how do I know which one? Well, I like companies that are consistently profitable. And if I only do profitable companies just before the EX date, the stock has a tendency to increase in value. So knowing when a stock is going to move, that's valuable information. That's why I use dividend stocks, because it tells me every 90 days. How do you protect downside? I don't. Okay, I only buy stocks I want to own for the long term. And I'm only jumping in for 5 days, sometimes 10, sometimes 15. Do you stay long when you call is sold? No. Colton, no, only dividend stocks with 20 years of increased dividends and weekly options. Thank you. You see, thank you. How do you protect from a downside? You just pick good stocks. That's it. All right, so selling 1070 upside calls on ASML expires this Friday. Okay, why are you coming out of retirement? I'm not coming out of retirement. I'm still retired. I just need a hobby. ULTY. Michael, do me a favor. Go check a look at the profits for ULTY. How many years have they been successfully been profitable? And how many years have the profits increased every single year? Go ahead, check it out. How many stocks are good to be on a portfolio? About 300. If I take a look at 300, think about it. Okay. Dividend stocks pay a dividend every 90 days. That's once every quarter. Would you buy Apple, Tesla here? Sure, why not? But wait a second, I'm still talking to, what's his name? Okay, John. If a good quality company pays a dividend every 90 days or once per quarter, January, February, March, first quarter, April, May, June, second quarter, July, August, September, third quarter, October, November, December, fourth quarter. Okay? 4 times a year. That means if there's 300 companies that are consistently profitable, and each one of these 300 companies pays a dividend each quarter, that's 1,200 different opportunities to collect a check per year. Now, you can't buy them all. So if I'm only looking at profitable companies once per quarter, well, the list for the first quarter is the exact same for the list of the second quarter, the third quarter, and the fourth quarter. The stocks are basically the exact same. The first week of the first quarter, the first week of the second quarter, first week of the third quarter, so on and so forth. They're repetitive. That's why I like dividend stocks. Now, we're past 11. It's a little blue. Is this pre-recorded? No, it's not. It's kind of weird. You're asking me, is it pre-recorded? And I'm answering you, no, it's not. It is 11:05 p.m. on the 20th day of October. Now, ask me that question tomorrow, and it will be pre-recorded tomorrow. Okay? So with Kohl's over 14 months, did you just keep buying new covered calls each week? No, I rolled it into each week. Ty, for the year knowledge, new here, have 1,000. What should I do? Where should I invest? Interesting question. Have a good night. Thanks for answering my weekly versus monthly question. So what is a realistic amount per week? 1% a week. That's a realistic amount. Verizon is the best dividend stock. I'm going to disagree with you, George. Verizon's not even paying 1% this week. Not even 1%. Okay? Walmart's paying more than that. Do you do one-on-one sessions? Yes, I do. Okay, go to the website, sign up for a phone call, free phone call. I won't try to sell you anything. It's past 11. I'm done. I'm out of here. You guys have a great night. We're going to do this all over again tomorrow. All right. Have a great night, everyone. See you tomorrow. And now, out here. And now, Austin. I'm enjoying COYY pays weekly. Good for you. I don't do that. Never heard of it. I don't buy stocks I've never heard of. Just, I'm kind of weird that way. All right. Next. Night, James. See you guys later tomorrow.